While all receive income and pay taxes, there are some distinctive aspects of both for clergy. In this presentation, we will explore some of the important things that clergy should know about their income and tax responsibilities. Please note, the information contained in this presentation does not constitute tax advice. Individuals should consult with their individual tax or financial advisors when making decisions and preparing their taxes. For IRS purposes, there are several factors that help determine eligibility. Being ordained, licensed, or commissioned is the most important factor. Other factors include administers or could administer some sacraments, conducts worship, performs services in the control, conduct, or maintenance of a religious organization and their integral agencies. If you are unsure if you meet these criteria, consult with a tax professional. Whether you are called by a congregation, appointed by a bishop, or hired by a non-traditional ministry setting, you need to understand the compensation package you receive. Understanding your compensation allows you to make decisions that will affect your taxable income. Some common components of clergy compensation include salary. Some denominations have minimum salary standards or other rules that apply to salary. Be sure you are familiar with your denomination's policies. A parsonage or housing allowance, health benefits, pension or retirement benefits, death and disability benefits, vacation and sick days, expense reimbursement, flexible spending accounts, health reimbursement accounts, or other health savings accounts are sometimes available. While not an exhaustive list, it does cover the majority of components of compensation clergy receive. Usually all items are reviewed annually, and some, such as a housing allowance, must be reviewed and approved annually. Clergy are responsible for paying applicable federal and state taxes. Along with federal income tax payments, there are also Social Security and Medicare taxes to pay. We will see later that there are important differences in how clergy are treated for federal income tax purposes compared to Social Security and Medicare payments. If your state has a state income tax, you will need to learn about any special requirements for clergy. In some cases, clergy may live in one state and the church where they serve is in another state. Be sure you know the tax rules for both states and how they apply to your situation. Both federal and state taxes require you to file a tax return that contains basic information about your financial life in order to calculate your taxes. There are some basic elements that apply to everyone. These elements are income from all sources. Some types of income can be excluded, and we will talk more about those later. Exemptions for dependents. If you have children or others who depend on you for their care, these are exemptions that lower your taxable income. Deductions. Expenses you are allowed to deduct from your income tax that lower your taxable income. Some common examples are mortgage interest, charitable giving, and some medical expenses. For most clergy, the primary source of income is their salary from the church. This will be reported to the clergy most often on a W-2 form. If you have employment other than the church, be sure to include that income. Other types of income include interest and dividends, retirement payments, and capital gains. One type of clergy income to pay particular attention to is honoraria. For the most part, any income received in exchange for services rendered is taxable, regardless of how it was received or designated. For example, gifts of money given to the clergy in appreciation for their participation in a wedding or funeral is income for tax purposes. Love offerings are another example. Such income is normally reported on Schedule C of the tax form. Tax professionals can help you make informed decisions on these types of income. Include all income in the appropriate categories on the tax form. The amount of taxable income can be reduced with a little planning. In addition to exemptions and deductions previously mentioned, and taking full advantage of the clergy parsonage/housing allowance to be discussed shortly, there are other items that may reduce taxable income. In some cases, health insurance premiums can be excluded. Accountable reimbursement plans are another area where clergy can benefit. Retirement contributions and flex spending accounts also prevent ways to lower your taxable income. Many of these are related to the compensation package and need to be updated annually. A tax professional can help advise you on what would most be beneficial in your particular situation. For clergy and staff, churches may set up an accountable reimbursement policy to pay approved expenses that are necessary to do the ministry of the church. A church sets up the budget for the pastor's professional expenses, such as travel, continuing education, subscriptions, etc. When the pastor incurs such an expense, the pastor submits a claim with backup substantiation. The church either pays the expense directly or reimburses the pastor. These funds are in the church budget and remain the property of the church. Any remaining funds cannot be paid to the pastor apart from approved reimbursement. The church needs a written policy of expenses covered, and documentation must be kept. The parsonage or housing allowance provision allows clergy to exclude the value of the parsonage provided or the housing allowance for tax purposes. The housing allowance is also available to retired clergy, but the housing allowance is not extended to surviving spouses. If a parsonage is provided, the value of the parsonage, furnishings, upkeep, and utilities are not counted for income tax purposes. If a housing allowance is provided, the amount that can be excluded as a housing allowance should be the lesser of three amounts. 1, the amount designated as a housing allowance. 2, the actual amount spent for housing, including furnishings, utilities, upkeep, taxes, mortgage, etc. 3, the fair rental value of the housing. The housing allowance needs to be set annually by your employer before the beginning of the tax year. You cannot change the housing allowance mid-year, but if you move to another church, you can set a new housing allowance when your employment begins. Allowable and non-allowable expenses that can be counted within the housing allowance exemption are available in printed resources and online, as well as rules for determining the fair rental value. In the federal tax system, most clergy are considered employees for income tax purposes. Those in non-traditional settings may need to consult with a tax advisor familiar with clergy tax status. However, for purposes of Social Security, clergy are classified as self-employed. This is known as dual status and is unique to clergy. This means that clergy must pay their Social Security at a higher self-employed rate provided by the Self-Employment Contribution Act, commonly known as SECA. Some congregations provide compensation designated to help clergy with Social Security. However, any such income must be reported by the clergy as ordinary income, and the W-2 issued by the church should include any such payments as income. Clergy who are in a unique or non-traditional employment setting will want to talk with a tax advisor who has experience working with clergy to understand how the rules apply in their case. Clergy who have a religious-based opposition to the acceptance of public insurance benefits can make an irrevocable election to opt out of Social Security. The vast majority of clergy do not opt out of Social Security, and most denominations discourage clergy from taking this option. You will be asked to provide written verification for the reasons for filing for the exemption before approval is granted. This exemption applies only to income received from service as a minister. Social Security will still be withheld if you take up secular employment. There are far-reaching implications of applying for such an exemption. Opting out means no Social Security or disability benefits, no survivor benefits, and no Medicare coverage when you reach retirement age. Clergy are exempt from the mandatory withholding of income taxes by their employer, but clergy can have their taxes withheld by completing a W-4. If taxes are not withheld from compensation, then the clergy person is responsible for making the appropriate quarterly estimated tax payments in a timely manner to the IRS. Most clergy find it is easier to have their taxes withheld. Churches may not withhold Social Security taxes for clergy. However, clergy can have additional funds withheld using the W-4 to cover the Social Security tax. If you do not have additional funds withheld, you are responsible for making appropriately estimated quarterly payments in a timely manner. Your taxable income for Social Security will be larger than your taxable income for income tax purposes, because the provision of a parsonage allowance or payment of a housing allowance is included in your income for Social Security purposes. A tax professional familiar with clergy taxes can help you make sure you are making the correct payments. Many denominations have resources for clergy related to taxes, so be sure to use these tools. The IRS offers a number of publications that are updated regularly. A number of private companies publish annual guides to clergy taxes and offer advice and assistance. Finally, tax and financial professionals with experience working with clergy are excellent resources.